Good morning, UPB, OptionMillionaires.com. It is March 10, 2015. It's a Tuesday, and this is the U.S. dollar index. It's off to a new 12-year high going back to 2003. I talked about this to start 2015 as a theme to watch, continued dollar strength. I also said that we'd head over 100, triple digits, and we're right about there. I also talked about this last week. The Federal Reserve meets next week, and I talked about the jobs report, which led to a spike in the U.S. dollar index, forcing the Fed. They have to remain credible, and keeping interest rates at 0% with strong job numbers it's not going to keep them credible as an institution, which would mean at some point they're going to have to raise interest rates. Now we're hearing talk about them removing the patient term from their policy statement, but that alone I don't think is going to do it. And if they do raise rates, that is going to severely impact the U.S. dollar index, and I think it's going to see a possible runaway move to over 104, 106, and that is going to really hurt economic growth. But of course, on top of that, we have the baton being passed from the Federal Reserve. The ECB started buying back its own bonds yesterday. The Japanese been buying back their own bonds hand over fist, manipulating currencies. Seems every central bank is lowering their interest rates these days. They're buying back their own debt. Corporations are buying back their own stock at record levels. Qualcomm yesterday announced an $18 billion share buyback. Back near it. I mean, look at this. We're heading back to the spikes we saw back in the internet bubble in 2000. Of course, it's different this time. And if you look at GM, we bailed these people out. Taxpayers here in the U.S. bailed out GM. GM was just going to become a distant memory, a car company that was just, you'd see in pictures. But we bailed them out, taxpayers did. And in turn, we saved jobs. And if you read a great article in Bloomberg Business from last week, the jobs that we saved, the people are making less now than ever before. Yet, the corporation is sitting on $25.2 billion in cash. So while all their employees have to go back and live with their parents, and activist investors come in and say, hey, that money's ours. We get to keep that for free, don't we? One of the actual orchestrators, the planners of the bailout, came back as an activist investor recently saying, hey, GM, pay out your money to us because we deserve all that money for doing absolutely nothing. So that's how the world works these days. Exciting place we live in. This is going to last forever, won't it? All these share buybacks, this is just, at some point there'll just be no stock to buy, and the whole world is just going to be, there'll be money kind of coming out of everyone's pockets, because that's just the way it's going to end here, right? Let's look at some stock charts, because charts work very well. You can see TLT has been pulling back, but we were at support. It looks like we're going to get a bounce here as, I don't know, central banks around the world buy back their own bonds. So, hey, why not here? Because, of course, over in Europe, they yield less for a bond. You can buy a bond that yields less percent on a country that was just about to go belly up a few years ago. Here in the U.S., you can actually get a better return on your investment when you're buying a bond. Which brings you also to dividend-yielding stocks here in the U.S. Look at Home Depot hitting a new record high recently. We'll see if it's a consolidation and a move up. They announced a gigantic buyback after their earnings report a couple weeks ago. Also increased their dividend. So something to keep an eye on. Something to sell? GDX. The gold miners continue to tumble. The strong U.S. dollar index is really hurting. And this is another theme I talked about. I had 5 of them heading into 2015. Precious metals, the miners. I talked about oil, commodities. So we'll see if we can see a continued pullback in gold. This is going to affect gold miners. GDX is going to continue to pull back. And a ticker that JB likes so much at Option Millionaires, he brought it up a couple days ago as well. Again, dust. All we are is dust in the wind. Looking to move up. We're still not overbought. We've got a lot of room to go to the upside. Dust looks to open significantly higher this morning. The S&P 500, SPY, has been pulling back. You can see this little tiny red candle here on the 5-year weekly. Look at that red candle, my goodness. Head for your bomb shelter, folks. That's what a pullback looks like these days. So we'll see if we can get a little bit of continuation. We closed at 208.36 right now. S&P 500 is ETF is at 206.64. My goodness. Get your helmets on, folks. It's a real nasty pullback. Look at the S&P 500 futures really started to pull back, and I'll just pull up a 1-minute chart. You can see the highs that we saw yesterday in yesterday's session before we pulled back a little bit, and then the late day surge. Futures started to melt, and then when the European markets opened for trade, look at this pullback, my goodness, and then we've had a bounce here over the last, I don't know, hour or so. Look at the currency market. I'm talking about the dollar index. Look at the dollar versus the euro. We're seeing big spikes, a lot of volatility, which is perfectly normal in a centrally planned marketplace, isn't it? Maybe they're losing control, I don't know. But you can see this is the euro dollar. Does this chart look like a topping pattern to you? As manipulated as you want to say it is to me, it looks like we could pull back down to the lows we saw back here at the internet bobo, the bouble, as I like to call it. So you look for a move, continuation to the downside, and going with the precious metal theme, the Aussie has been getting smoked. I know I like talking about stocks, but let's bring up the currencies. Same kind of chart here. I talked about this. I brought this chart up too recently, the head and shoulders pattern. Look at the continuation, 76. We might head to 62.50, the lows that we saw in 2009. Let's move into a couple other stocks. The REITs. I like some of the REITs for a pullback. Simon Property Group announced an acquisition yesterday. They say, hey, our stock's at record high. We can give some stock. We've got cash. We can get debt at 0% interest rate policy. Let's do that. So that's what they did, and they're just buying stuff. That's great. Formerly back in 2009, they were going to go bankrupt like GGP. You're down with GGP. Look at the volume here, down to about 20 bucks. Was going to go bankrupt, and then like, oh no. BXP, Boston Property Group. I'm in some puts here for a pullback. You can see, is this a flag? You look for a 10-year monthly pattern. It almost looks like some sort of a bull flag. Well, I hope not, because I'm in the puts, and I look from a shorter term time duration. I'm looking for a move back down to this 130 and then to 125 level. McDonald's. Looks like a nice double top here. I brought this up. Let me see if I can bring the drawings up. There it is. Bing! Look at this double top here. We hit a new a move over 100, and now we've pulled back yesterday. Announced 4% decline in revenue. Woo! Was met with some buying. They're like, hey, this is great. This is great because less revenue means we'll just borrow more money and buy back more stock. I don't know. That makes sense, doesn't it? So we had an initial negative reaction, and it's like, hey, they do offer a dividend yield that's higher than pretty much all the debt the government can offer, so let's just get McDonald's. People will buy that crap. Of course, McDonald's is going to start going healthy, right? Kale burgers and refried beans that are organically massaged with pickles that are grown in some sort of cryogenic chamber, if that even makes any sense. How about Netflix? I was talking about Netflix as well. Moving up against long-term. Let's see if they got the chart, the trend lines and stuff. There we go. Look at that. Same thing as McDonald's. Look at that. We've been pulling back. You go to StockTwits with a blog at Option Millionaire, especially StockTwits. Go back, look at the chart. I only posted a mere week ago or so, and Netflix has been pulling back, man. Could we pull back to support here at about the 315 level? Yeah, it's possible. How about Big Lots? Look at Big Lots. Up, 5% yesterday? A big spike up to the highs we saw in November, just before its earnings collapse. Yeah. The analysts down here back in 2014 when I said, hey, the stock is going to head significantly higher, they were pretty negative. They're like, hey, man, this company stinks. I'm just being a little generalized here. And then we move up here after the earnings report on Friday. Yesterday, analysts were coming out, hey, this company rocks, man, rocks. Big Lots, dude, Big Lots, big prices. So they upgraded the stock. They put the targets at, 60, 65. Doesn't even matter. So I'm in some puts here for Big Lots for a pullback. The market is now opening. I do have to end this video. I'll see you in the chat room at OptionMillionaires.com. It's going to be an exciting trading session. Everyone take care. Goodbye.